They say, oh, crypto is just a casino people go to and they, everyone gets wiped out. And it's like, that's not true. That's not true. Like, yes, my city has bad things that happen, but my city is not a bad city.
October 10th marked the biggest crypto liquidation in history. Nearly 20 billion was wiped out of the market in just minutes. But what really caused it? Were it central exchanges or just reckless trading behavior? To understand this, we're now talking to GlueNet founder and World Liberty Financial advisor, Ogle. Ogle, it's really nice to have you with us today.
Thank you. Thank you for having me. I appreciate it. It's good to meet you.
Amazing. And I also want to say you've also come here representing one of the latest meme coin launchpad, America.Fun. We are going to talk about that, of course, in a minute. But before we do that, Ogle, what's your take on the market crash? I know a lot of people are blaming centralized exchanges, Coinbase and Binance, namely, for forced liquidations, account freezes. A lot of them are actually blaming trading behavior, having like 30x or 100x leveraged positions. So what's
yeah. I mean, it's. I don't really think it has to be one thing, is it? You don't die from heart disease because you only ate a lot of burger, right? You ate a lot of burger. You didn't go work out. You have a bad family history. There's like 1,000 things that kind of come together that cause catastrophes. And I think that a catastrophic drop like what we saw the other day, and I say catastrophic because like many coins actually went to close to zero, and a lot of them that didn't were down by 60, 70% in one day. This is not normal. This is not even normal for crazy crypto times. So whenever you have catastrophic drops like that, it's usually sort of a combination of various different factors. One of those, of course, is liquidity itself. Like where are the bids? And I think that like we saw in the drop, in like the precipitous drops, that the bids to purchase simply were not there. Like there's just not enough people who are interested in buying, even at lower prices on the fly, than probably what a lot of people expected. And that's the first thing. Second, we have a macro situation that's like not really like super strong right now. Like there's a lot of issues, and of course Donald Trump said like a somewhat offhand remark, but one that spooks people, I think, related to the relationship between the United States and China. And so you have, in that case, bots that are going to pick up those sorts of things, automatic trading bots and stuff. They're going to see, they're going to assess a tweet or assess a message, see that it's very negative, and then sell positions or short positions, right? And then you have hyper leveraged positions that mostly not sophisticated traders are taking. And so you have a stuff called cross margin on where like basically you're using your positions that are in a perpetual exchange to hold up other positions. But the problem is if you have a flash crash, then your collateral in the form of those positions goes to zero or goes to 10 cents or 20 cents when it used to be $2. Everything gets wiped out. And so it's a cascade. And so it's all these things put together. In my opinion, my personal belief is that the over leveraging in perpetual exchanges is probably like the most important part of it. But all these things had to come together to cause a big problem like this.
Absolutely. And there's this, and I've reported on this extensively, there's this increasing scrutiny of centralized exchanges. Of course, Binance and Pump, we named them, but I would say against all of them. And do you think like this biggest single liquidation is kind of a starting point when people realize that you can't really have our money on centralized exchanges and not to clean out your money? Do you think that mentality is coming in now, or is it going to be more or less the same as it was?
Yeah. So I got started in crypto in 2012, right? And so like back in those days, there really kind of wasn't an option for a centralized exchange. There were a couple of small ones that were out there that don't exist anymore. And then Coinbase came around right after that. But for the most part, you couldn't even really do anything like that. And as time went on, the centralized exchanges became more convenient for people. And so people were like, okay, this is easy. I can get on there. It's quote unquote safer. It doesn't require as much technical acumen to figure out. And so people went that way. But the risks associated with centralized exchanges never left, right? I mean, we've seen those same risks exploited with Celsius, or you have Alex Mashinsky and his crew, taking people's money and screwing people. You have it with FTX, obviously, famously. And there are probably 50 other, situations people have been in where if you don't have the actual access to your own tokens, then you end up being screwed. I don't know how many more convincing events we need, Mohammed. Like, I'm not sure what else do we need to happen for people to put into their brain, okay, look, it's worth me putting an hour into figuring out how to use a hardware wallet or a software wallet at least, and doing things decentralized, as opposed to to putting so much risk on themselves. But so, like, to answer your question, do I think this is going to change things? Probably not. Probably not. But I do think that as new people come into crypto, they're increasingly doing so via decentralized fashions. And that's why you have like KuCoin made their own chain. Binance made their own chain a few years ago. Binance Smart Chain. Now it's called Binance or BNB chain. You have Coinbase having Base. Like, they wouldn't put time, effort, resources into these things if they didn't see that they were going to be themselves disrupted by the decentralized future, right? So they're trying to get ahead of it and kind of disrupt themselves as opposed to letting some other company do it. And so it seems to me that it might not be these kind of events that cause the movement to like decentralized space, but it might be the centralized players themselves kind of pushing people in that direction, making it easier for them. Companies like Glue, which I co-founded, that focuses on that, but there's probably 50 other ones that try to do similar stuff to make it easy for people to come on board without having the risk associated with centralized exchanges.
True. No, and I've always said, I said this to friends and family as well. If you're gonna come into crypto, if you really have the mentality you want to come into crypto, there's no putting, just dipping in the water. You'd have to learn something, at least the bare minimum of it, and that's knowing how an hardware wallet works, and knowing how DEX works. So you're spot on with that. Also, on that note, I think the current gold rush mentality that we are saying, personally, I would say I've never seen this level of I'm gonna get rich off crypto mentality since I've been in this space for over a decade now, and rightfully so, because crypto has been skyrocketing lately. So what do you think? Is this a bad thing now for the industry, for the market, and is it gonna harm us like it?
Oh, it's terrible. Oh, it's so bad. It's just so bad. Because you end up like people invest for different reasons. They invest because they believe they want to vote with their money, right? So it's like a political kind of a vote kind of a thing. They invest because they see the future of something and they want to make money on it in the long term. Fair enough. People invest for all sorts of different motivations, but then you have a totally different type of people who are gamblers, right? And gamblers are trying to kind of make it all in one trade usually. Right. And so they say, you know what, like, I've got $400. I've seen stories of someone making $1 million. I want to be that guy. I want to live my life. I want to be 23 and a millionaire too. Why can't I? And you mentioned the word gold rush, which I think is actually kind of a good example, actually, because when you look back in the 1800s at the California gold rush, it was up near San Francisco. The people who made the money there were the people who were super, super early. And then a couple of people who got lucky, but the most money was made by service providers, people who are providing shovels, people who are selling clothes, this kind of stuff. And like, that's actually where the cash was made. Most people who went there, almost everyone did not make money because they were just gamblers. They were going there just trying their best, and they ended up losing more than they made. In fact, Levi Strauss, Levi, like the pant company, that's how they got rich. They were over there supplying pants to people who were going out there doing gold mining. Studebaker used to be a really popular car back in the back a long time ago. That's how the Studebakers made their money. And so it's super fascinating, I think, to see that, because you see companies that have massive valuations in crypto, but these are the companies that are building the underpinnings. They're the ones providing the services, the on-ramping, the off-ramping. These are proper companies that are going to make a lot of money, but the vast majority of people gambling are just not. But the issue is this: when you have people come in, and the majority of them are, what you might call like the TikTok generation that has a 6-second kind of focus, and they want to get in and get out and make money so fast. The issue with that systemically for us as people who've been in the crypto space for a long time is that that's what gets reported on, right? And so the outside world, your family, my family, other people, they say, oh, crypto is just a casino people go to, and they, everyone gets wiped out. And it's like, that's not true. That's not true. Like, yes, my city has bad things that happen, but my city is not a bad city. Right. And it's unfortunate because you end up getting this bad reputation for, for like just a few of the apples there. And so, yeah, I do think it's actually quite problematic. I think these wipeouts like this, that occur are a good thing. I mean, I'll admit I got wiped out for a ton of money. Like I had a long on a couple of things that got really, really screwed, and it ended up screwing up my portfolio. But I also play with play money, like when I'm doing those things. Like it's okay. I could lose it. I'm going to be fine. But I think a lot of people, including some friends of mine, lost everything, right? And then afterward, they're picking up the pieces, they're drying their tears. And one of them, a very close friend of mine, she messaged me and she said, I've been thinking about this and I have a gambling addiction, is what it is. And she's a smart, super successful, this kind of person, like she's not really in the crypto space necessarily, but she's like, I have this kind of addiction and I got to think about it. Right. And I think that like those kind of confessions and like self-reflections that people have might allow them to come back in and be good contributors to crypto. But it's not going to fix the fact that now the whole world looks at us as SBF is a scammer, Alex Machine's is a scammer, we're a bunch of degenerate gamblers. It's just, it sucks. We have to like fix that. It's not easy.
It's so true. And I know, like, I've had people come and ask me what you do, and I say crypto journalism, and you promote gambling, and it hurts so much. And I know you and we didn't enter this industry because to be taught as gamblers, and it's just messed up. And I know one of a close friend of mine had 30th leveraged like 50K Friday, and it's people who are 50K means a lot to them, it's potentially their life savings. So it's bad, and it is gambling. But the thing is, your friend recognized that it was gambling. Most people still don't recognize this as gambling, and they just think they made a bad trade. So on that, I just want to ask you about leverage trading. And it has increased dramatically this year with Hyperliquid now coming in. Everything. What's your 2 cents on this? What do you say to leverage traders? Any tips? Anything that you want them to know?
Yeah, I mean, leverage trading can be very valuable. It's just you have to play the risk game properly. That's really what it boils down to. You need to have a good reason you go into something. You need to have a good reason to get out of it, and you need to make sure that your margins and your collateral is kind of proper. The issue is this: like I have a lot of friends who are like, "Oh, I didn't go too leveraged. I only did 10x." It's like, how is that not too? How have we got to a point where 10x is not very leveraged? That's wild to me. It's like not very leveraged is like 2x or like 2.5x. Like that's not very leveraged. You're still pretty leveraged, but you're not that leveraged at that point. But like it's taking what could be a really useful tool to enhance and multiply your earnings and turning it into a gambling instrument yet again, right? And so you have BTC can be 40x longs. You have Astra, which allows 1001x perp longs. Just like there's no good reason to have these sorts of things. Like there's just not. I'm okay with the product existing because people should be able to do what they want to do. But don't convince yourself that you're like some like gigabrain investor going in at a 50x on anything, because you're not. You're just not. Like you're a gambler and you might get lucky, in which case, great, cash it out, buy your Maserati or whatever. But don't think that you're just like super smart because you did that. Like it's really not the case. So short answer, I think that these features are here to stay. They're probably going to get way worse in some ways. I think it's going to like this is where the market is heading. Even with these blowouts, we're going to have significantly more focus on futures markets, on prediction markets, these sorts of things. And there's ways of doing them well, but that's not how most people do them. So my advice, if I had one small baby piece of advice to give to people, and it's advice that I have occasionally messed up and not done myself, and I paid for it. So take this from someone who's been burned a number of times for making bad mistakes. But my advice would be the following: if you're using a perpetual exchange platform, so Hyperliquid, Astra, Quanto, whatever the case might be, if you're using these platforms, do isolated margin, right? This is the most important thing you could possibly do. And what that means is there's 2 different ways of taking positions. So let's say today I want to go long on, something, I don't know, BNB or something. And I want to do a 5x long on BNB. If I do a 5x long on BNB and I put it in isolated margin, I limit the amount I can lose. So I put $5,000 in there. I do it at 5x so I can buy $25,000, give or take, of the token. If it goes down, the worst I can do is $5,000 of a loss. Now, on the other hand, the default of most trading platforms is cross, which is the worst way to do it. But that's the default. That's the screwed up part. That's where they should do better for the users, where they don't. And what cross means is that if I deposit, say, $50,000 into my account and I buy BNB, it looks like I have way more money than I do. So I say, oh, okay, I'll go buy some AOL too, and I'll go buy a little bit of Bitcoin, and I'll go buy a little bit of this and a little bit of that. And it looks like I've got way more because it's using the positions you purchase as collateral, right? And so you're basically compounding your multiples. It's not 2x anymore. It's not 5x anymore. You're doing like a 20x, like an under collateralized position in your thing there. So what happens is if one position goes down, it takes everything with it, and you get wiped out totally. So you lose the whole 50K instead of just the 5. So the very best suggestion I can give people, if they take nothing else from this whole podcast at all, and they decide they want to do perpetual exchange trading, you must use isolated margin.
Definitely, and I think it's absolutely critical that to know that most platforms, as you mentioned, Binance Future as well, has cross margin by default. To check that, and otherwise, when a big composition goes, your ETF is going to get liquidated as well. So. Yep. Most people don't know this, sad, but yeah, always check your margins. So after the sad part, and it is the saddest part, let's move on to the next and more exciting stuff. Okay. Let's talk about World Liberty Financial. I know you're have been one of the most exciting projects and questionable one in 2025. So I'm not going to ask you something that I know you wouldn't possibly want to be able to answer, but I just want your opinion on something that World Liberty Financial, no matter how we see it, how we spin it, it has a political shadow to it. Even if it might not be political, it has a shadow to it. So does that mean if the current administration, Trump's name is very much linked to it, if something would have happened to this administration, if another administration come in, the next one, is there a risk of this project failing? Is that political shadow too big? Or do you think, no, there's enough building going on individually that can eventually come out of that political shadow?
I think that's going to very highly depend on the position of crypto per se, like at that point. So if crypto has gone upward a lot in general, so if we have BTC still hanging around the 100,000, 200,000 arena, we have people not getting, like, there's not any black swans that occur, like another FTX kind of a situation. I think in that case, they're not going to be able to roll it back because it's going to piss everybody off. Because at that point, like if World Liberty Fi is successful in what what the goals are, and obviously my opinion is that will be the case, then a very significant amount of people on all sides of the political spectrum are going to be coming on and having access to wealth creation that they didn't have previously. And so you can't, it's really hard to like look a voter in the eye and say, hey, look, nothing bad's happened. You're making money. You're happy. We're going to take it away from you. That's not. I don't think that's easy. On the other hand, if there was some kind of big thing that happened near whenever Donald Trump's tenure is over, and another group came in, say the Democrats or what have you, and they can lean on that bad fortune, like what might have happened, then yes, there's a world where they say, hey, look, we have to protect the people. This has become too crazy. We had, $60 billion of losses from regular everyday Americans, blah, blah, blah. They'll play the story as saviors, in which case, there is risk there. So long as like there's not a crazy black swan, World Liberty Fi does, decently well itself, and there's not like a world war, I think we're good to go. But yeah, there is a world. I just think it's a small risk.
Absolutely. Let's talk about America.Fun, which is another project you're an advisor to, and it's Solana meme coin launchpad. So why do we need another launchpad?
Yeah, so actually, it's actually to the point of some of this. So just to be clear, by the way, America.Fun is not a Solana meme coin launchpad. It's just a Solana launchpad. And so people can launch meme coins, they can launch utility tokens, they can launch really, whatever they want to off of there. It itself is a bit of a meme. because it's, every token that's made ends in USA, right? The contract address ends in USA. So it's kind of funny. It's meant to be kind of, promoting the American ethos, this sort of thing. All of the pairs can be paired against USD1, which is World Liberty Finance's stablecoin. But there are some distinct differences in the way that this thing works that I think are important. And they actually go to our conversation we've just had the past 20 minutes. It's significantly safer in a lot of ways. And so as an example, right now, you end up seeing let's say we wanted to make MoCoin, right? And some kind of big news came out and Mo was like, the talk of the town for a minute. What's going to happen? There's going to be 63,000 Mo's that get launched immediately because bots will do it. And you don't know which one's the right one. You don't know which one's a scam. You don't know which one's the real one. You don't know which one's going to run. You don't know, you have no idea where to go. With America.Fun, you can only launch one ticker of the same name. And so when you come on there can only be one move. Now, the people who deploy that one have a period of time to that they have to graduate. And graduation takes a certain amount of money. If they don't graduate, then the ticker is released and someone else can do MoCoin and try again until you get to the point where someone actually has a proper MoCoin that does graduate, that does do well, that has people backing it, that kind of thing. So you end up in a situation where if you don't know which MoCoin to go, is the right one, you just got to go to America.Fun, type in Mo, and you're only going to see one. There's not going to be 15 different ones on there, right? So that's one example. Another thing is it actually costs money to deploy. And so right now it's free to deploy in every other launchpad. And people say, oh, it's really great because, you should lower the barrier to entry. I don't think so, really. I actually think that heightening the barrier to entry is a good thing as long as it's not prohibitively high. And so in our case, it's below $20. It doesn't cost much, but it does cost a little bit of the AOL token. That's the token. It's AOL. It does cost a little bit of that token to launch. And what that does is prevents bots from spamming zillions of different things, just looking to trap people in there and then dump on them. In this case, it costs you $20. You're going to be a little more thoughtful as a spammer, as a deployer on what am I going to do? Do I want to spend $2,000 deploying, 100 of these on America.Fun, or do I want to spend $0 deploying a bunch of spam on somewhere else? I'm probably going to spend $0, right? It just makes sense. And so there's 45 other things I could go through, in detail about America.Fun, the platform, that like sort of prove the point of what I'm trying to talk about. But the idea here is to have a safer, more legitimate place for people who are not as degenerate. They're not as gambly as some other places, but they do want to see something early. They want to get in early. They want to have the chance to make a ton of money, and they want to be able to rely upon, some of the safeguards that we put in place.
Talk about safeguards. One of the exclusive reports we published, I think last month, was that on Pump.Fun, there was a wave of racist, aggressive, all sorts of offensive tokens being created there, and not just being created, that they racked up millions, over 20 millions or 30 millions, that they ended up on, DX Screener, they ended up on Gecko Terminal, and they were the trending tokens, and it was bad. And to our much frustration, Pump.Fun hasn't responded to, any comments on that, and they've never addressed that. And eventually America.Fun has a fee, which would be a really good way to stop this kind of things, but it's still $20 though. So how do you think like America.Fun, addresses that problem?
I can tell you exactly how we do it. So the back end is permissionless. So people could theoretically launch a token on the back end if they have the technical, chops to do so. They can launch a token. They can do what they want to do. Like, I can't really prevent that. That's how the blockchain works. But America.Fun itself, the website, is permissioned. So what shows up on our website, on the front page, on the trending list, on the part where we have perpetual exchanges on there, on the swap, we have a swap function, any of this kind of stuff, we decide what's going to be there, right? And so if you think back to a long time ago, some people are old enough. I don't think you are. You look like a young man, but some people are old enough to be familiar with America Online back a long time ago, and it was the way people could get online that was. You still had access. You had email, you had chats, you had internet, you had all this kind of stuff, but there were safeguards in place to keep you from getting too harmed. There were safeguards in place to stop racism, stop abuse, stop child pornography, this kind of stuff. There was none of that kind of crap on there. And that's why it worked. Like, that's why, because for a long time, people were just going bananas on the internet, and it was, kids can't get on there without seeing a bunch of dicks all everywhere and stuff. It wasn't good. And so then AOL said, you know what, we're going to make a walled garden. We're going to give you 95% of what you want. And the other 5%, they can go in their cesspool and lay with each other in the mud. That's okay. But this is what we're going to have. So that's kind of the idea here too, is like, there's not a chance in the universe that if we were to get a complaint or we were to be notified, hey, look, there's, some kind of, some sort of coin that we can think about a name of, I'm sure, there's not a chance in the universe that would end up staying on our website. Now, it doesn't mean people can't trade it. It doesn't mean people can't go find it their own in other ways. But you're not going to find it, trade it, we're not going to make perps for it with our partners. We're not going to help them get onto centralized exchanges. We're not going to help them find market makers. And these are all the things we are doing for the projects that help launch on us. We would never do that for these kind of tokens.
And I think this is the kind of thing that every launchpad should do. Freedom is one thing. Being ethical is another thing. There is a limit to freedom, I believe, that we must maintain. What's your vision with America.Fun? And as we speak about Pump.Fun, they are the market leaders. They've dominated the market. Bong.Fun has been growing. That's 4.meme, which you see that has made very popular now. So how does America.Fun come into this play? This is a very crowded market right now, and a lot of big players are, they have the entire.
Yeah, I totally agree with you. I think that it's reputational in a lot of ways. And so officially speaking, America.Fun is officially the strategic arm of Let's Bonk's USD1 partnership. So it's USD1 X Radium X Bonk, and then we're the strategic arm of this collaboration. And so the idea is to have special projects, different kind of things that are kind of unusual, that are not competing head to head against Pump or against whatever else. And so in our case, obviously, like I said, we have this kind of different way of doing the launchpad. There's a different way of doing swaps, actually, that we haven't talked about. There's the ability for you to get a perpetual exchange listing if you get to a certain point. There's hand holding for the projects. We'll make sure they get connected to all the right the right exchanges, centralized exchanges, the right market makers, all the people they want, all the KOLs, this kind of stuff. So it's a lot more of like a curated experience. And so the idea basically is to fill the gap that exists right now between, on one side, totally permissionless Pump.Fun type of stuff where you have anything goes, which is fine. There's a place for this. And then the way other side of it, which is ICM, which is like every investor has to be, has to do KYC, has to the listing has to go through like a, SEC approval, that kind of stuff. These are two very different places, and they're polar opposites, and we're trying to exist in the middle space there. I personally think the real cream is in the middle. I think that the ICMs are a little bit too hard for most people. Some people don't have the cash to do it. They don't have the qualifications as an investor. And I think the pump kind of side of things, it just burns people out because you get screwed so much over and over and over. Like, you're excited about it for a few minutes, but then you run out of money. And so if I were in that position, I was thinking, where exactly would I rather be? I'd like to be in a place that's safer. It's still not, I still have all the opportunities. I can still have a runner. I can still make a ton of money, but it's way, way, way safer. So that's where I think we exist. I think it's a differentiating factor that's significant, and one that is unlikely to be copied by Pump or some of the other people, because it's just not their model. Like, they prefer huge amounts of tokens, and we prefer fewer tokens but better tokens.
And you've chosen USD1 as the partner, and I'm presuming when you say powered by WLFIs, USD1, do they have any sort of partnership or stake in this platform?
As someone, and I'm an advisor to World Liberty Finance, right? And I'm a big proponent of USD1. Obviously, I've worked hard to make sure that it gets spread out as much as possible. There's a lot of reasons for this. But one thing that, and I'm sorry to say it, but I'm just simply not allowed to talk about, the World Liberty 5 project itself in any kind of public or private capacity. I'm just simply not. The project has their own team who talks about, what partnerships look like and what capacity those might take or don't take. And I think it's probably wisest and best for everybody if I just, let them make any statements they would make about anything. And I'm not implying there's a relationship here, and I'm not implying there's not a relationship here. I'm just saying I'm not making a comment on it.
No, definitely. I was just curious to know that, and for our launchpad to be catered to Americans and the US market as well, the most adopted stablecoin there is USDC, and to kind of limit it to USD1, and USD1 being there is good, but to limiting that with USD1, does that limit the growth of America.Fun, or you don't see it as a problem?
Well, so to be clear, America.Fun is not catered toward American citizens. America.Fun is focused on the American ethos, and the American ethos being that you don't have to have friends in high places to get to make it. You can start off at the bottom and you can make it to the top if you do things right and you align yourself and you focus and you stay committed. Like, this is sort of the idea. And so, believe it or not, over half of our holders and supporters, over half, are Chinese. They're not Americans. And it's incredible to see this. I mean, I lived in China for a period of time and did a lot of stuff with. I have a lot of Chinese friends, and they tell me, they say, we really appreciate, we're excited about America.Fun because we, just like everybody else in the world, it's not just Americans who wake up and want a better life. Everybody in the world wakes up and wants a better life. But sometimes their government, their upbringing, their societal structures don't allow that kind of thing to happen quite as easily. And so the America.Fun website is meant to be focused on that, right? So first, I just want to clarify that. Now, as far as the USDC, USD1 part goes, the thing is here, people can trade USDC against these pairs. It's not a problem. It's just when you go to create the token itself, if you're a creator, then the created pair initially will be either in Solana, if you like, or it'll be in USD1. Now, you can go later and you can make your own pool on with whatever denomination you want to make it on. And even if you don't, the dexes, like Jupiter, for example, will just do the trade for you. It'll go, okay, you've got $10,000 USDC. We'll convert to USD1. That's part one of our trade. And then part two of our trade is to go buy it, right? So it'll be invisible to you either way. But it still generates volume, for us, and it generates volume for USD1, and we're using that volume ourselves to buy the tokens and to support the projects that are coming to work with us. And so I'm perfectly okay with however people want to buy these tokens.
Well, I think this was one of the most insightful podcasts we've had lately. Well, I really want to thank you for your time. Before I let you go, I just have one last question from you. What's your prediction on the market right now? Do you think we're still gonna be headed for a much bigger price target, or do you think a much needed correction is in the near future?
Look, my honest opinion, I'm betting I'm voting by longing, but if I have to tell you, I think I'm just voting against the tide right now. like most of my most of the smart money, most of my friends that don't vote with their opinions, they vote with their looking at their bottom line, are going the other way at the moment, and they're kind of waiting a little bit. But I just think, at this position in my life, like I can't short things I believe in. Even if it makes me more money, I just can't do it. I'd rather, I'll go long, I'll support it. I'm going to be that guy. And then eventually we'll get back where we're going. Cause I think macro, we're going the right way.
Absolutely. Sometimes you have to listen to your heart.
Exactly. Well, thank you for saying, by the way, that nice thing about it being a good interview. I appreciate it because you've been a great host and it's been a lot of fun being here with you.
Thank you. Well, it's been a pleasure. Thank you so much. And yeah, thank you for everyone for listening. Have a good day.
Take care.